Broadcasting of this program is brought to you by Interactive Brokers. Deep discount direct access. 90-plus markets worldwide.
Before we return to the telephone calls and the email messages, we want to remind you that you'll never miss the top picks if we send them straight to your inbox. Each night, BNN puts out the top picks and analysis from our roster of experts on Market Call and Market Call Tonight. Go to bnn.ca/subscribe. You get the nightly newsletter, and the very next day, Marty says commentary on the market-moving stories. David Burrows is our guest from Barometer. North American large caps is the focus, and Gary's in Langley, BC. Good morning, Gary.
Good morning, Michael and David. David, my question's on Teck Resources. Do you see it as a buy now, or would you wait for more of a downside yet? What do you think of the commodities and the materials section? Thank you.
Okay, well, thanks for your call, Gary. I'm going to go through this the way we would on any position. First of all, market-wise, we're a little bit cautious here, so I think that we are being a little bit more careful of economically sensitive groups. In our sector work, we have seen continued deterioration in the breadth of the material sector. In other words, fewer and fewer stocks are holding up in price. There has been some deterioration going on to the surface. Teck, as a company, great company if that's what's working, but basic materials really are not the spot to be focused on. Certainly through this correction, they have become somewhat sold out, and they certainly could have a bounce here. The question is how much longevity you're going to see in that bounce. I think that one of the concerns is there are a tremendous number of tankers sitting stacked high with coal off of the coast of China. Coal pricing is somewhat weak, and some of the metals pricing is very weak. So we would not own Teck right now. In fact, you know, we are short a couple of big metals producers with the view that markets are signaling that it could be a tougher summer. If your view is that central bankers will ride in with a big additional push on liquidity, you probably could see a bounce in the short run. But I think you'd have to be awfully nimble. For anybody other than a short-term trader, I would not purchase the stock currently.
So you're shorting metals companies, companies that need metallurgical coal to fuel their fires to be able to make the metals in the first place, and Teck is the one that's further down that food chain that's going to suffer.
Yeah, I mean, listen, within that group, Teck is a great company. The problem is, you know, nice house in a bad neighborhood. It's just a difficult sector right now to make money, and you are making a pretty big bet that the recent economic data is an anomaly and that, in fact, things will speed up. Now, the moves that the central bankers have made with liquidity have had diminishing returns over the last 2 years. And so I would expect you would get a bounce, but it might not be long-lived. All
right, Gary, thanks for that. From Langley to Toronto, and Richard. Thanks for holding, Richard.
Hi. Just wonder about Barrick Gold. My price is around $44. Just wonder what is this company? It's going down so yesterday and today almost 10%. Thanks.
All right.
So the bet that's being made right now is that if there is some kind of quantitative easing or if there is some package that comes out of the ECB, it's likely that the gold stocks would have a bounce. Each of the last three big policy moves led to sort of a 2 or 3 month rally before, and in each case, there has been some follow-through afterwards, but each time we've seen this easing, there's been less and less follow-through. So people are definitely making a bet right now that if there is new easing, the golds will bounce. Again, I don't think that it should be expected to be long-lived.
But are investors punishing Peter Munk for giving Aaron Regent the old heave-ho? The shares are down 10% in the last 2 days, whereas the competitors in the space are only down 3% in 2 days.
Well, look at, I mean, most of the mid-cap stocks are in the gold space are down 5.5% today. They've had a good rally over the last 2 weeks, there's no question. And, you know, we actually have added a little bit of gold in the last 2 weeks as an insurance policy, which we would add to if they continue on.
Gold or gold stocks?
Gold stocks and some gold. But this is a small weight, and it's an initial position after having been out of the group since December of last year.
All right, Richard, thanks for that. From Toronto to Sarnia. Hi, Phil. Welcome to Market Call.
Good afternoon. I'd like to hear about AT&T. I'll hang up and listen.
You bet.
Sure. So, Phil, from a sector standpoint, we really like the telecom stocks. We have quite a good exposure to the group. We own TELUS, we own BCE, we own Verizon, and we own AT&T. This is part of the market that is very clearly seeing net inflows of capital. There is a lot of money looking for dividend yield, and you're getting it out of the big telcos. What's interesting is they have all signaled that they may slow down the incentives that they're spending on handsets for their wireless businesses, in which case that could help them be a little bit more profitable in that space So we like AT&T, we like Verizon, we like the sector.
You're not worried that we've got yet another player in the States getting Apple iPhones on a prepaid basis as opposed to an AT&T contract?
Look, there's all kinds of micro issues across the sector, but right now the sector has a significant tailwind, and the most important thing is outside of the sector, it's front and center inside that dividend theme. And you want to be in the spaces that are seeing new net inflows of capital. That's where the money is going. All
right, Phil, thanks for that. Raj in Winnipeg, last word to you. Welcome to Market Call.
Hi, good afternoon. My question is regarding Bank of America. Is it a good time to buy, and what are the short and long-term views, please? Thank you. I'll hang up and listen. Thank you.
So, Raj, there's a conflict here in the banking thesis. On one hand, you can make a case that because there is relatively low loan growth and there are loans getting paid off, that you could see an increase of capital on balance sheets that could be seen to be paid out by way of dividends, because you don't want that capital to pile up. You're getting judged based on your return on equity. So that's the bull case. The bear case is, of course, we're facing some of these global macro issues, and financial services would sit right in the middle of it. Now, I think that the North American banks are pretty well insulated and very well capitalized. In the short run, though, you do face some of those short-term risks from a flight from the financial services group. So I'll tell you, we have a small weight in banks. It has not worked out very well in the first, 3-4 weeks of that position. But I think that there is dividend support here. I'd be comfortable owning some. I wouldn't make it a big position and just have a stop.
All right, Raj, thanks for that. It's time now for the Market Call Minute. All right, for Dan in Toronto, Canadian oil sands, buy, sell, or hold?
I would sell the oil sands companies currently. Risk based on the fact that they're not getting the WTI pricing. There's a big discount.
For Michael in Vancouver, TransCanada, is the trap a buy, a sell, or a hold?
Buy it firmly in the pipeline space. That is one of the strongest parts of the market. Lots of upside.
From Vancouver to Vancouver Island, for Janice Schlumberger, SLB.
The oil service companies, I think, are having a difficult time in disclosure. We are short the stock.
Saputo for Andre in Montreal. Would you buy the cheesemaker?
Consumer staples looks good. Food inflation coming down. Their input costs are going down. Pretty stable company.
For Grant in Thunder Bay, Ontario, Johnson & Johnson, buy, sell, or hold?
I like the sector. I'd prefer to own a pure pharma company like an Abbott or a Pfizer.
Time Warner for Jim on the mailbag.
We like the media sector. Content providers, I think, have great and strong cash flows. I would be a hold on that stock.
All right. Thank you for your telephone calls and your email messages. When we come back, it's the top picks from David Burrows of Barometer Capital Management.